Next company in focus is Zaggle Prepaid. The company raised over 590 crore rupees through its QIP. The stock showing some buzz today, about 2% up. Harsh joins in with the details.
Well, interesting one because fast growing, profit making, gives or provides services and therefore will continue to scale up, in that sense as a business. But they had already planned for a QIP plus debt raise of around 950 crore in October. Now, whether this translates to a full 950 crore raise, as of now, they've raised something just below 600 crore. So they still have an enabling provision which helps them raise some more. So that's one thing. The second thing is that they're also looking at inorganic expansion, mostly in domains which they haven't typically already had a foothold in. What and how quickly are they going to try and work around those is going to be interesting. The utilization of funds, where are they going to utilize it, because they are already profit making, is going to be very interesting to understand. So those are 2-3 factors which we'll try to understand better. Also, growth is going to be extremely strong. FY26, they are expecting a top line which is double of FY24, and that is likely on the conservative side because the number of order wins that Zaggle has had over the last month or two have been very, very strong. So the traction on the product side is very strong. Whether there could be an upside surprise to this is going to be interesting to watch out. Also, their margin picture is going to be mid-teens in a couple of years or 3 years from now. Can that also surprise on the upside, given that the products are already in place, they're just selling them now, and therefore everything flows to the bottom line, and how much of that goes to R&D otherwise, and how does accounting work? Some of those facets will be interesting to understand. But yes, an interesting company, very high growth, has delivered stellar returns for investors. Can it continue to do so will be the big question.
Let's ask that question to Dr. Raj Narayanam. He's founder and executive chairman of Zaggle. Dr. Raj Narayanam. I'm hoping I got that correct this time, right? I did. Okay.
Right.
So, Dr. Raj, can I address you as Dr. Raj? Is that okay with you?
Absolutely fine.
Perfect. Yeah. Thank you so much. So, many things that we want to ask, but I want to start off with the point that Harsh made, right? That it promises to be a very strong next 15 months, let's put it that way, because he was talking about FY26, I'm including Q4 as well out here. So very promising next 15 months. You could do double in FY26 of what you did in FY25, and brokerages and analysts believe that this is conservative. Would that be a fair assessment?
See, thank you so much for inviting me to the show. It is always very easy to do projections and very difficult to execute.
True.
But what we have always done is whatever we have committed is what we have delivered. We have always on the conservative side, don't want to, be extremely aggressive with the, growth prospects. But what we think is, for us, about 50-55% growth, which we promised this year is absolutely table stakes. We should be able to very easily do it. We might up it by, maybe another 2 or 3%. Coming years are going to be extremely, explosive is how I would say, because there is tremendous amount of tailwinds, which we have in the next couple of months. We are going to announce some very, very big, contracts. We have about 40 large contracts which are in pipeline. We should be able to, cover them up, let's say in next 4 or 5 months. The amount of adoption, what we are seeing for our solutions is absolutely amazing, unbelievable. And, I remain very, very bullish on prospects of Zaggle as well as, the ability to add value to our customers. The question is that, the way we try to see and figure out is not by our revenues, but by, how are we able to add, value to our customer. And, if a customer is buying more than one product from us, that makes us very happy because that means that he's seeing value. And as long as, customers are seeing value, I think, we are going to grow at a very hectic pace.
And so I'm just trying to understand, would you have large contracts coming in? I'm presuming large contracts. the customer also has some bargaining power or pricing power when they are negotiating, etc. And you're growing at a breakneck pace. Would all of this happen at the cost of return ratios, margins, etc.? Or do you believe that with economies of scale, all of these can actually improve?
To be very candid, operating leverage has already kicked in. We see a definite operating leverage has, come into the business as we move to a higher scale, and the scale becomes larger and larger. Our cost of servicing goes down and down. Okay, our cost of product goes down and down. Our entire philosophy is that the larger the project we get, the larger the execution we are able to do. I think the returns are going to be extra large.
Dr. Raj, good morning. Tamanna here as well. And you talked about 40 more marquee clients coming in. You've described the next year as explosive growth. I'm just wondering, what are the sectors or kind of clientele which is untapped? Because you've had quite an impressive list of new sign-ons in 2024 calendar year as well. Can you give us a sense of, are you expanding that addressable market?
So absolutely, see one of the use cases which I will tell you, and you will be very surprised, is the fee payment use case in any school or any university. Okay, so we are in the business of wherever there is a software and a payment instrument is where we go in and plug that in. Again, we never ever thought that the schools, universities, and there are massive numbers of universities, about 663 in total, and we never thought that could be our market. Okay, now we are experimenting with 2 large universities. We are going ahead and putting in the solution, figuring it out how we can accept.
So one sec, Dr. Raj, just explain the use case a little more. How do you make it easier for the businesses, in this case schools and universities, and on the counterpart, people who they're getting the fees from, with your product?
Yeah, I'll give you 3 use cases there. So in any school or university, they have their expenses, and the expenses, basic expenses on the teachers, plus they have expenses on various vendors, etc. All of that we put in our solution called Zoyer. Okay, we also write a credit limit, which will be provided by our partner bank. Okay, so or we will provide a credit card, to the school. They will make all those payments to the vendors. So it becomes a very seamless process. They exactly know that this is the particular bill which has come in, invoice which has come in, and against that they have made the payment. So what we see is that a lot of schools today are grappling with manual sheets, manual paper, manual reconciliation. All of that will get replaced by our solution called Zoyer, which is a credit card plus software. Okay, second is you look at the expense management piece. All their expenses which are like petty expenses or some other kinds of expenses which are there, which today are just put on a cheaty. Cheaty is signed, and then the principal will sign it, and then it goes. Okay, all that will be replaced by our expense management system. Okay, the third thing is the fee payments which are coming in. Okay, so every school grapples with about 80% of the fees come in, and 10 or about 15 to 20% of the fees is sometimes delayed. Now they want all the fees to come in on time. Okay, and parents do not have that, sometimes they do not have the financial ability, to be able to pay the entire fee. So there is where we bring in our partners, namely the large banks who will come in and, who will directly reach out to, these customers through the school, and will be able to provide them the necessary facility to make the payments. So this is the third use case which we have. We never looked at it, we never thought, and suddenly we are realizing that whichever school we are talking to, every school, every university, everybody is open to looking at this and wanting to do more and more of this solution. So this is another market which is expanding. Similarly, you look at FASTag. We have never looked at FASTag. We have not done FASTag till now, but we are looking at an acquisition in that space, and possibly that acquisition will also help us bump up our revenue by at least 150 to 200 crores.
So, no, interesting. Both are new markets which sound very interesting. What are these market sizes or revenue projections, if you have any, Dr. Raj, for these 2 spaces?
So I would say, I would say overall, if you look at for Zoyer, the TAM is roughly going to be about 500 to, $600 billion is the TAM for our overall business. And you imagine we just process, very, very, small part of it, today. And within the schools and the FASTag, we think that, that is roughly about a 5 to 6,000 crore opportunity overall.
Okay, Dr. Raj, now you've done, I mean, it's a recent IPO, then you've done a QIP as well. Would you be adequately funded for the next 12 months for carrying out whatever needs you have with the capital in order to reach the growth numbers, or would you need further dilution over the next 18 months?
I don't think so. See, we are adequately funded. If required, maybe a little bit, chance change we might go for, but otherwise we're adequately funded. We have got enough cash on the books. So from our IPO we have money. Now with the QIP we have money. We just want to go aggressive, and maintaining our margins or increasing our margins. So we are looking at acquisitions which are EBITDA accretive, which would add decently to our bottom line. And also, one important factor is ROE. For us, now that the money is coming in just now, we need to deploy it very responsibly, to be able to see that, both the ROE and return on investment, both of them, are high. And, as we build value for our, shareholders, stakeholders, customers, we will also look at, constantly looking at new opportunities by which we are able to increase our TAM. The bigger the TAM becomes, larger is the opportunity for us. And I think, we are an India growth story built for overall global markets. But right now, India per se is so huge means unbelievably huge market is there. And, one of our others I have not, spoken about is a solution called Brome. Brome is branch recurring operational monthly expenditure. You ask any company which has a branch, they are struggling, to balance and reconcile the, money there. Now this Brome, when it comes in and, and we are doing, one POC with one of the largest, means the largest, retail brand. We are also talking to, multiple companies. We just won Canfin Homes, with 400 odd branches. So the opportunities to, digitize the entire payment system and while remaining in the spend management is, hugely accretive for us.
Okay, so in which case, would you believe, therefore, I mean, the emphasis that you laid on the word huge, Dr. Raj, leads me to believe that there is a very high possibility of very strong growth rates continuing from just the India business, not just for FY26, but beyond that as well for the next 3-4 years. So would that be a fair assumption? I mean, you are in a nascency stage, if you will. The business is not necessarily very age-old established, right? The industry per se, if you will. It's not even an industry. I see not too many players like you per se. Would you continue growing at a high growth rate for the better part of the decade?
So, a standalone basis, absolutely yes. Combined basis, we could grow at about, with the acquisitions, we could grow at about 80% or so is what is our, thought.
Did you say 80%?
Yeah, standalone, we'll be able to grow at about 40-45%. And with the acquisitions, which we are planning to do with this money, which we have raised, we should, be able to up our guidance to about 25 to 80%, in FY26-27.
No, but okay. No, so FY26, sorry, just one last question on this. FY26, I believe your guidance is doubling of revenues. You are saying on top of that, in FY27, you could possibly grow between 50 to 80%.
Yeah, you could put it that way. Yeah.
Okay.
And what would margins look like in this scenario? Dr. Raj, since you said that you want your acquisitions to be margin accretive, what is the timeline for margin expansion?
So, Tamanu, how we are looking at it is that, we were earlier in 2022, we were at a 16% EBITDA. So, now we are at about, 9.5 to 10.5% EBITDA. We would look at, growing EBITDA percentage year by year by at least 1.5, 2%. Okay, so at least even if we do 1% accretion, by 2028, we should be at least at about 13.5, 14%. Maybe in that year, further operating leverage kicking in, we might touch 16. 16 to 20% is what where we want to be. We have to try very, very hard. We have to work very hard. We have to have a balance between the growth and the profitability. Both those levers we have to manage. So sometimes we trim down our how do you call, we go a little bit slow on acquisitions of corporates, because we know that profitability should not get hit. Otherwise, we could have easily grown at the rate of about 100%, but have been very calibrated. Growth is good for us. For long term, we have to be more moderate, and try to work harder to achieve the operating efficiency and leverage.
So, that's the interesting point, because the growth in top line has been scorching, and you are also predicting a huge bump up, doubling of revenues, etc. But building up margins is seeming like a bit of a challenge, or will need a change in strategy, or how are you looking at it?
Think about it, Tamanna. So, for example, schools, colleges, etc., which was like a completely new market for us. Now you have to put a sales force there. You need to do a lot of consulting with them. Okay. So, all of that, is expenditure. Okay. So, question is, no, you grow at, your own pace. We would reach, on a standalone basis, if we don't do some of these experiments, we could reach, easily about 15, 16%. But you think about it, that what is it that we want to do? We want to grow the market, expand TAM, look at areas which have not yet got into this space of payment instrument plus plus software, and see how we expand it. Because we have to look, this is a marathon, we are running. This is not like a 100-meter race. So we have to look at, what happens after 5 years, 7 years, 8 years, 10 years, and we have to be extremely calibrated. Okay, calibrated about how we are growing, and growing healthily. That is most important for us.
Thank you so much for speaking with us, Dr. Raj, and best of luck in the new year. That was the Executive Chairman of Zaggle Prepaid talking about the growth path ahead. Neeraj, I found the use cases for schools and universities particularly interesting, especially the part about parents not being able to pay fees on time because of financial distress. And then here is a solution which not only facilitates the school, but offers finance to parents as well.
Yeah, and then adding on to the payment management piece, right? Spoke about Canfin Homes, 400 branches, and what can be done. So, the use cases seem very, 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 very promising. By the way, so that's Zaggle, of course. The stock has done really well. The key part, management saying 100% growth in FY26 possible. 50 to 80% growth on top of that 100% possible in FY27. The stock, as we did the interview, has actually inched higher and now currently trading at the high point of the day, up about 4%.